Hey, everybody, welcome in. Happy Tuesday. People are afraid. People are sitting on their hands. They don't know what's next. Crypto market lost $200 billion. We're now down about 2.2 trillion exactly on the nose. And a lot of volume. We had $130 billion in volume. Fear and greed is in the toilet at 17. Extreme fear. And Bitcoin dominance is 55%. So a lot has happened after what many called a financial Armageddon, but we survived and we came out the other side. So let's jump into all the detail. And this will be about what is next. Analyzing a little bit of history, analyzing what we went through, how bad was it compared to other cycles, and so much more. Thank you as well to the mods in chat for coming. And this is not financial advice. Thank you as well to Patreon and LL Bishop. Become a new Patreon member. Love your channel. Thank you so much for being part of the family. Now let's talk about the fear and greed. This is kind of scary. It's like the meme fear and greed chart where the needle is broken off and there's blood all over the place. It's not quite that bad, but extreme fear is pretty much as low as it gets, everybody. So the world is nervous. And we'll see that in some data. Some people made some good decisions. Some people made some bad decisions. Let's look at where we are so far in the monthly returns. August. Literally, it's funny if you look at the last 3 years. 2022, August is down 14%. 2023, August down 11.3%. 2024, August down 11%. Rusty Woods, thank you for coming. That's a bit of a pattern right there. And again, as I've always said, August is the second worst month of the year for Bitcoin. And September is normally even worse. But given what I see, trends and patterns and analysis, maybe we're through the worst of it already. Maybe we had the bad September crap hit in August. I'll back that up with data in a minute. Let's jump in. Let's get into the news first. First of all, oh, by the way, a piece I didn't write on because I don't want to be political, but apparently there's a new vice president pick on the Democratic side who is not crypto-friendly. So that's good news. At least not as crypto-friendly as the previous candidate that they were going to select, Shapiro or something. Anyway, let's talk about where we are. Everybody's talking about the carry trade. And this is from Let's Trade Together. So why is it so important? Well, for 30 years, Japan had 0% interest rates. As a result, for 30 years, investors borrowed yen at no cost and invested it globally. T-bills and a basket of risk assets, including the NASDAQ. This explains why the NASDAQ sold off as well. And for the first time in many years, Bank of Japan increased rates by 1/4 point. Almost unprecedented, not expected, maybe a mistake. We shall see. As a result, increased rates, people had to reverse their trade, and the trade amount, some people say 20 trillion, some people say it's closer to 4 trillion. I think it's more about 4 trillion. And a lot of the damage has already happened. And we saw that over the weekend. It was ugly, really ugly if you're in certain assets. Let's talk about some of the good news, the tailwinds. This is from Good Morning Crypto. Breaking, U.S. Treasury to begin buying back $46 billion in government debt starting tomorrow. By the way, they used to cut at $30 billion, but the machine is coming back on. But it's starting in high gear. $46 billion. It's going to happen very frequently. Money supply will increase. And the rising tide will float all boats. It's that simple. Don't overthink it, everybody. And an interesting shout out to Michael Saylor. He spoke about how traditional finance, he was on CNBC today, operates 19% of the time. Capital like air and water should be available 100% of the time. This is true. I've always mocked, my joke was always, imagine you'd be able to tell your grandchildren you lived at a time when the stock markets were only open. I used to say 17% of the time, but Michael Saylor says 19%. But if you do the math and you take into account holidays, I think there's 252 trading years. They're open 6.5 hours a day, but some of the days they have half days and etc. You add all that up, I don't remember what it is. 1,600 hours divided by the total number of hours. It's more like 18%. But let's not quibble amongst friends here. Less than a fifth of the time the traditional market's open. And you know what sucked yesterday? And I am livid. If I had the time, I'd be real pissed off with Schwab. But These puppies were all down yesterday for the first 1 or 2 hours of trading, which is completely unacceptable. Completely unacceptable. And the big joke is now, like things like big tech like Microsoft and Crowd and the trad markets and centralized exchanges are all down more than crypto, a lot more, which is bizarre. That's how things have changed. And that shows you as well, the writing is on the wall, ladies and gentlemen, for where we are going. Also, bear in mind as well, a lot of questions coming in around MicroStrategy. Be careful out there. There's a 10-for-1 split coming on August 8th. Now, from stuff that I've read, apparently you need to own the shares by close of business on the record date, which is the 1st of August. Okay, 1st of August, that's 5 days ago. You must own the shares to be eligible for the stock split. The payable date is August 7th. You'll see the shares in your account on August 8th. So don't be surprised if you see MicroStrategy at $140 or $150 in your account when last you saw it was $1,400 or $1,500. That's because the 10-for-1 split. That's going to have a lot of impact and there'll be a lot of volatility that we'll be excited to trade going forward. So be prepared for that, everybody. Also, the miners are rebounding. I bought some miners yesterday, but it's impressive to see BitDeer at the top of the list, up 15.18%. By the way, I own Bitfarms, I own BitDeer, I own a little bit of Riot, a little bit of CleanSpark. No, a lot of CleanSpark, actually. CleanSpark's my biggest position, and a little bit of Iris Energy. So that's where they are. Again, they do not run along the lines of what Bitcoin does, so be careful of that as well. But they are fun to play. And I think the Q2 earnings will be quite impressive, at least for some of the miners. I see that in some of the numbers I'm looking at. And yes, that miner video hopefully will come this week. It's just been so busy with the markets and everything that's going on. There's a lot. Let's get into some charts. Let's talk about how bad this hit was. Because historically speaking, it was pretty darn bad. This is from Econometrics. Bitcoin is experiencing one of its worst corrections in the last decade. Thank you, Japanese carry trade. Didn't mean for that to rhyme, by the way. The negative returns of Bitcoin over the past 6 days are worse than 90% of the drops Bitcoin experienced in the same time frame over the last 10 years. This was a special circumstance, ladies and gentlemen. This was not a common event. Was it a black swan? No, more like a gray swan, as some people anticipated it. It hit a little bit faster than expected, and it hit crypto because it happened more or less at a weekend when the only thing you could really sell was crypto, and that's why certain things got really badly hammered. But we are now at a lowest point. Again, even worse than 95% of the 6-day corrections in the past decade. Remember, 6-day correction is a very specific window of time to look at a correction. Sometimes corrections can happen very fast and rebounds can happen fast too. So we'll just wait and see how this thing turns out. In addition, this is interesting because I did speak last week about the 63K before any of this crap went down. Okay, we got caught in a bit of a tailwind. Let's check on the Bitcoin price right now. Bitcoin price at 56.5. It is up. Let me show you how big the rebound was. I think yesterday in the space of 70 minutes, it went up $2,000. It was at 53 and change yesterday. Now it's up $3,500 since then. So pretty impressive rebound. But let's look at this. This is what they call the CME futures gap. You've heard it about. I heard about it a lot on this channel. But here you can see the big gap between when we went into the weekend versus what happened over the weekend from the CME gap itself. This is the Bitcoin CME futures. And you can see right there, the gap is between where we are right now at 56.5 all the way up to 63. That is a $5,000 gap, ladies and gentlemen. So many believe that gap will close. Therefore, we're heading back to 63K. That's the good news. Again, if history repeats, that's probably what's going to happen. We have to wait and see. It's definitely going to happen. The question is, how long will it take to get there? Let's look at some on-chain data from Check On Chain. Here you can see long liquidations dominates. This is where the longs got completely smashed over the last couple of days, and a moment of silence as well for all of those longs. Remember the rules, everybody. If you're playing with leverage, have your liquidations levels super, super low, like multiple standard deviations away from the current price. critical, or else you were just saying, hey, market maker, come and mug me. Do it. And that's why all these Bybits and everything else make so much money, because you get mugged. Don't let that happen to you. Be smarter. Richard Brett, thank you so much for coming. Now let's look at other views of liquidations. Futures liquidations, massively liquidated on the long side and the future side too. And short-term holder realized price is now negative again. That is sometimes a pain period. Once we get back above that $61,000, it'll be positive again. And we could get there pretty fast. We're $3,500 away from that level. But again, the people that just got into Bitcoin, on average, over the last 155 days, are now underwater. They are bleeding on their position on average. Now, you could have been very clever with big courage and jump into the burning building over the weekend, and you could have snagged some literally sub 50K Bitcoin, which many people believed, we'd never hit again. So there we are. That's how bad this was. And again, this points out that worse than 90% of all drawdowns over the last 10 years on a 6-day period, of course. What else do we got? Again, the amount of value that the short-term holders are underwater is about 10,000 Bitcoin. So in perspective of things, it's not too much. Remember, most of Bitcoin, 70% is held by long-term holders. So, but 10,000 Bitcoin is still a lot. Let's look how big that is in a minute with the ETFs and how much they are stacking, if they are at all. Now, this is kind of the big story today. What happens after September? There's been a lot of talk about, where are we? Where are we going? What's the seasonality look like for Bitcoin? This is a beautiful chart here from, I apologize. I forget the name of this group. I will write it in the comments later, or I found this on Twitter, but begins with C, and I'm having a complete brain fart. Sorry about that. Anyway, the point is, as I mentioned before, maybe the damage, September is normally the ugliest month. There is a theory that I adhere to as well, that the damage is coming earlier. It's moving left to August. Okay, I'll show you this chart one more time to show you what I mean. Here, you can see the uglies in August, last 3 years in a row. And then Septembers have not been ugly like in history. It's as if the calendar is shifting forward a little bit. Now, when we break down this chart here, what tells us, yes, August 2023 was okay. And then we went up in August, fell back to break even. Then in September, we had that vicious wick down. The question is, did we have the existing vicious wick down that happened last year, but did that just happen in August instead? And therefore, September could be completely bonkers. The answer is probably. If that's the case, October was a crazy month in 2023. Now, many anticipate that September could be when we take liftoff, i.e., we go really high. Target could be as high as $86,000. Remember, risk happens fast. All of the big moves of Bitcoin happen in 10 days any given year. So don't try be cute. Don't try outsmart the market. Make sure you are on the train for those 10 days, even if it means going through a big storm, wavy patch, getting wet, getting cold, whatever. Be on the train for those 10 days, because a few of them could hit in September. And I'll talk about why in a second as well. First of all, we'll go a little bit further out, not just September. This is Marty Party Tea Time. Hope he doesn't mind me saying that. Friend of the channel, DCA member. Marty has been talking about his cup and handle chart on the weekly for quite some time. And we had a little bit of, a small crack in the handle. But he still maintains the fact that we could, in fact, be bouncing right off the lower line, which shook out the retail, shook out the leverage, etc. ETFs are accumulating, flushed out $1 billion of leverage traders in a little over 24 hours, which is hard to believe. And the target he has on this cup and handle pattern, is $127,402. It'd be funny if he said $420, but it's $402 before 2026. Okay, that means we could hit 127K sometime in 2025. Thank you, CoinDog, as well, and Mr. Mike. Appreciate you guys. So we'll see if this happens. And I've got a light flickering. That's weird. Now, another interesting news too. Again, looking at patterns, looking at history, looking at cycles. We spoke a lot about the 2015-2017 cycle being an analog to the 2022-2025. And this is from Peter Brandt, total TA guru and top-notch analyst. Shout out to Peter and hope he is well. Now, what this examines is the price declines post-halving. And Peter Brandt, I hope I interpret your chart correctly. But there is a notable decline in Bitcoin's price following the halving event in history. We know the 90 days after the halving suck. We're now about day 110, if I'm not mistaken. And with the 2015 to 2017 cycle experienced, get this, a large drop of down 27%, and then it recovered to new highs. Now, despite the initial decline, Bitcoin tends to recover and reach new all-time highs. The time it takes to reach these new all-time high varies. For example, in 2011 to 2013, it took the shortest amount of time, only 8 weeks. And in 2015 to 2017, it took the longest time, 24 weeks. Right now, we are at 16 weeks. That means if history repeats, ladies and gentlemen, okay, and it's uncanny how it often does, we have only 8 weeks to go to a new all-time high, which is completely confluent with what? Let me show you. This one. We're taking the plan forward from October to September. We are literally 6 or 8 weeks from this happening, maybe in September, or very close to it. You know, things can sometimes fall over a week, but I think this is interesting. Again, risk happens fast. Now, I have a new exhibit to show you in a second regarding the ETFs, so don't hang up. Bitcoin Only Playlist will be here after the video is posted, also at the very end. Let's talk about the black hole, because this is important. This cycle is different because of the ETFs. They gobble up massive amounts of Bitcoin. We have to stress that. Let's first of all, shout out to Eric Balchunas. IBIT is a beast. Oh, he didn't say that. They're my words. I always talk about the perpetual bid. But from Eric here, he talks about how IBIT investors woke up on Monday morning to a 14% move over the weekend, stomaching an 8% decline the week prior. And what do? Absolutely nothing. Zero flows out. Blackrock IBIT ETF for Bitcoin has never had an outflow, never had a negative day. Compared to some of the degens, these boomers are like the Rock of Gibraltar. You guys are so lucky to have them. So Eric is pro BlackRock Bitcoin. But this is key here, all right? There is a perpetual bid coming into this huge money runner. Massive $11 trillion shop. And Morgan Stanley's sales guys start selling later this week. 15,000 people, professional salespeople. Each salesperson has between 60 and 80 customers. They'll be dialing for dollars, literally saying, hey, buy this. And they'll be buying two things. One, either FBTC, which is the Fidelity ETF, or BlackRock. These flows are about to go into overdrive over the next 2 or 3 months. All right? They're going to get in now, especially Bitcoin at 50,000. Even if you don't know what Bitcoin is, you know that's relatively cheap when you know the all-time high is nearly $74,000. So they're going to say, yeah, I'm going to allocate next week. That'll be pretty good. And again, that could also support the thesis that we make a new all-time high in September or very early October of this year. Or a little longer. We'll see. Either way, it's going up. That is for certain. Let's look at the day 143. We had 2 nasty negative days in a row. Now, the good thing, in fairness to the ETFs, yes, they sold because they felt, hey, something is going down, and they sold a big chunk on Friday, $237 million worth. Then they sold another $170 million yesterday. It was good for them to sell on Friday. It was silly for them to sell on Monday. So it shows you their timing is off. Monday is when you stack, okay? If your timing is perfect, you sell on the Friday and you buy on the Monday. And Tuesday is always the best day for ETFs. And we're on a Tuesday right now. And the volumes are absolutely insane right now as well. The ETF money is coming back. I expect a positive day tomorrow because it's cheap. All right, let's look at this. This is probably the most alarming chart today I will share. This is the amount of Bitcoin purchased per day since January 11th by all these different players. Blackrock now have bought, on average, 2,212 Bitcoin a day. Fidelity, 1,238 Bitcoin a day. And guess who's number 3 in the box? Mr. 100. And yes, I know I'm going to hear, oh, it's an upgrade cold wallet. Cold wallets do not exhibit this DCA buying behavior. When price is high, they sell. When price is low, they stack like demons. These guys bought 3,300 Bitcoin over the past 7 days. 3,300. They bought 1,800 Bitcoin in the last 48 hours. Okay? In $100 increments, more or less, which is crazy. And then the third biggest buyer is ARK, 334 Bitcoin a day. Remember, only 450 are being issued a day. ARK is nearly buying up the total supply. Mr. 100 is nearly buying up the total supply. And BlackRock, they are buying up 5 times the total supply every freaking day. How long can this go on? Okay, you add all these together, you're over 4,000 Bitcoin a day. Way over, which is 10x the miner issuance. And the miners have stopped selling, they're hodling. In fact, Marathon are buying, they're spending their money and stacking Bitcoin as well as mining it. That's like you owning a chocolate factory and going to the store and buying more chocolate. I hope that analogy sinks in. It's a bit crude, but hey, it works for me. And I like chocolate. Well, dark chocolate. Let's talk about this too. Big dump days, 7,000 Bitcoin were shed over 2 days. And that's why I believe it'll be a big buy day tomorrow. We shall see. Again, remember, it's okay to sell before a big event happens. That's actually really good if you can time it, and timing the market is hard. But when prices fall $20,000, don't sell. That's when you buy. Okay, so and always keep cash on hand. That was yesterday's big lesson in DCA. Thank you all for coming. Hope you enjoyed the show. Again, I'll be back tomorrow with Okta. Okta is too big to deliver today. There's too much breaking news, and I need to do a little more research before I talk about some of the breaking news that's happening too. But it's going to be big for some altcoins out there. You can probably guess which ones they are. Anyway, thank you all for coming. Thank you as well, Preston, Sean Donnelly, T&D Tesla, K8, long-term holder, all you lovely people. 8,000 people watching live. Enjoy the show. Hold tight. I do expect a very good H2. And when I say H2, I confused people last week and I said H2. That means the second half of the year. So we're deeply going into the second half. And the last quarter will be incredible. October, November, December should be very good. But we could kick things off in earnest in September. If these patterns that I just walked you through repeat. Let's see. The internet never lies, so you can always refer back to this video too. See if I'm right. Thanks all. And by the way, I don't have a crystal ball, but I do have a lot of data, and that's the difference. Thanks all. Bye-bye.